So Friday, the 17th of September, was Quadruple Witching Day. 700 million individual option contracts expired on Friday, one of the largest in history. Friday's Quadruple Witching Day was a pretty magnificent event. I mean, the enormity of the amount of options and future contracts that all expired on one day, on the 17th of September. This happens 4 times a year. The next time will be, I believe, December 17th of this year. This option world and futures contract world has exploded since March of last year when COVID first hit. A lot of people got to stay home. They started trading their stimulus checks, and they started using options to do so. And in using options, you're able to get that, I believe, 1 to 100 leverage ratio for every dollar you put in. Compared to if you just bought a stock or an index outright, you're not going to get that big of bump when the market goes up or that position goes up. Whereas with options, you get basically a 1 to 100 ratio jump in that movement. On the upside, that's great. On the downside, not so great. On future contracts, I believe it's 1 to 1,000 ratio. So it's enormous. And the thing with future contracts is that when they go negative, they can go negative forever to zero. And that costs you, the person who owns that future contract, an enormous amount of money. So having a cash position to offset that is needed by most brokerage firms to counterbalance that. It's very interesting how options and futures have become a norm in markets, which is now causing more and more volatility. And this is why more and more I've decided and focus on volatility as a leading indicator to what is to come. Over the last couple weeks, I've noticed on the VIX that if you look at like an hourly or a 4-hour chart of the VIX, you get this descending wedge and then an explosion higher after the descending wedge has consolidated lower, and then you get explosion in volatility. The one thing I have noticed that has really triggered me to say we are due for a correction, and this may be the correction. This being shot on Monday, the Dow Jones is down 534 points. This morning when I woke up at 3:30 or 3:45 in the morning Central Time, I saw 500, 600 print on the futures contracts on the negative side. When I look back at volatility, like the VIX, and the performance of that over the last, say, 2 weeks, it was right there. It was telling me that if I had paid attention well enough, that we were bound for a major meltdown. Now, what is causing this meltdown today? Well, it's a real estate company out of China, Evergrande or something like that. They are $300 billion in the hole, and they're failing. Couple months ago, there was a lot of talk about these empty cities in China, and that China was building these humongous cities in hopes that people would move in and be a part of that city and they grow their economy. And if you think about the makeup of GDP growth is oftentimes looked from the perspective of material spending of materials and goods and iron and all that kind of thing, and building major buildings. And you can move your GDP, and as China has over the last 20 some years, has moved their GDP by construction, by going in and building bridges in the middle of nowhere, by building cities. And what we're seeing now is the basically repercussions of building empty cities and empty residential places. There isn't as much demand as this company is experiencing as in comparison to the production they've made. So now we're seeing the meltdown of this company. And $300 billion is a lot of money. And what the question is, will we see the China and the China government come in and basically bail these guys out to prevent a total meltdown. Here's the thing about all this that really caught my ear this morning. A lot of the stocks that trade on the Hong Kong index, the Chinese and Singapore index, or not Singapore, but China's indexes aren't available for you and I to buy. We can't buy those stocks. And so if China's having a basically emotional liquidation sale today and over the last, for quite a while now, I believe since June or so of this year, the question I have is, why is this affecting us? And here's what I've come to the conclusion of. We're due. We're due for a pullback. And we haven't seen a 5% or so pullback in a long time. Yeah, we've seen 0.5%, 1%, maybe 2% moves in over the last, say, 3 to 6 months, but we haven't seen a good solid 5 or 10% correction. And when I look back at the VIX indexes, VIX charts, say on the S&P or the VIX over the last, say, 4 to 5 weeks, what I've noticed is that the VIX has stayed above 16 on its level, and it's been bouncing between 16 and 20 or so. And it builds these wedges, and I'll put a chart of all the different wedges that I've identified. And by watching that and noticing that we have not broken below 16 and headed back down to, say, 15 and 14 and 12, where if you look out on a longer period of time, say, over the last 3 or 4 years, where you get the VIX down around 12, around 10 to 12 or 10 to 15 range, whereas it's a normalcy of the S&P. But instead, we're above 16, and we've sustained that, and we're moving higher. When I look at the VIX right now, it's at 25.15. We had a gap up today. My question is, will we gap higher? And then when I look at my calculations, when I put in the numbers prior to doing this, we should, from what I figure, we'll see the VIX get to 26. But the question is, if we hit 26, where does that bring the S&P down to? Well, on SPY, I look at it and I think, probably right around 427 on the SPYs, which would be a pretty cool place to enter. And when you start to look at charts and support levels, it's a very nice support level right around that range. So the thing about today is this a day to buy? Is Monday, the 20th of September, a day to buy? And from my perspective, I don't know. But what the VIX is telling me and what volatility is telling me is that maybe not. Maybe we're not done. Maybe we haven't accumulated enough sell-off to basically offset the highs that we've accomplished over the last, basically at the end of last month of August. So what am I doing? Well, I'm just sitting on my hands. I'm literally sitting in cash right now. Took a little bit of a beating, to be honest with you, but I've learned a lot. And I think that's this whole process. Don't risk any more than you can afford, number one. Number two, do your homework and step back. I've developed this bad habit of being very narrow in my thinking or in my viewing, looking at charts from a narrow standpoint. But when I blow them out to 12 months, 24 months, 36 months periods of time, all of a sudden I start to see differences. And this is where I caught this movement in the VIX and this descending wedge movement and then an explosion higher, descending wedge, explosion higher. My question today is, will we get another descending wedge? Typically, when gaps make a big move, we see a gap up in a stock or in this case the VIX, we retrace that. So if we retrace that, we'd come back down to about 20.54 on the VIX from its 25.22 as I'm recording this. But the question is, does that become support? And do we see another movement higher in the next couple days? Now, one of the things I've been thinking a lot about is the Fed meeting on Wednesday. there's a lot of controversy around the Fed right now because some of their federal representatives have been trading this market, which if you were just a layman or a fund manager and you got caught for doing something like that, that's called insider trading, and you would go to prison, as we saw many years ago with a lot of the insider trading people who traded the financial crisis and a couple other times throughout between the financial crisis and now. You would go to prison. And from what I'm seeing and the explanation of some of these federal representatives, these guys have been trading this market since last year. Trading this market. They've made millions of dollars based off information that, yeah, they can say they didn't know it, but you're the Fed. You know it. You know. And this is where I go, the questioning the validity, the trustworthiness of the Fed is really going to come into focus. And on Wednesday, I suspect they'll address this. Federal Chairman Powell will address this in some way or another. But also, I believe that the idea that they'll start tapering is most likely not, especially after today. I don't see that happening because if they did, chances are the market would melt down even further and we get a 10% correction, which in normal world terms, and when it comes to markets, a 5 to 10% correction is okay. It's when you break through 10% that it becomes a really big problem. So if you think about it, off the highs, if I'm using SPY as my example, the highs are 454 and some change. You minus 10% off that, well, that puts the SPY at 400. Or if you equivalent on the SPX or S&P 500 index, that's around 4,000. We should not doubt that that could happen. But what we have to be more attuned to is what is happening in front of us. What is happening in the charts, in the quantitative numbers that we calculate, and in the behavior. We all knew, if you look back over the last 2 weeks, including me, we all knew there was a problem in China with their real estate market. We all knew, and it was in the news, that one of their biggest real estate developers was in trouble. And then all of a sudden, we woke up this morning and the market basically is puking up everything. But the thing is, it's an excuse. In my opinion, it's an excuse. Economically, here in the United States, we're pretty good. We're strong. We've got people possibly going back to work and coming off these stimulus checks, hopefully. We're seeing more production. We're seeing lumber prices normalize to sort of normalize. And we're seeing the demand for people wanting to buy things, consumer spending. We're seeing companies are doing well. Earnings season will be interesting next month. But I look at this overall in the United States, and we're slowly recovering. It's not rapid, it's not exponential growth, but it's recovering. And you take an event like China, which is an event, and when we can't buy a lot of their stocks and we can't invest in a lot of those, we have to take into account that this news narrative-driven event is basically an event, and it possibly is creating an opportunity to buy some really good stuff for the long term, in my opinion, between now and the end of the year, and capitalize on this. But you have to do your homework. You have to do your homework. You have to study. And when I look at things, I look at the VIX, I look at volatility, volume, and the price action. And I've also created recently basically a checklist. Before I start making a decision on buying anything, I go through a checklist, and I encourage you to do the same. Create a checklist. Are you seeing higher highs and higher lows? Are you seeing trend, supports and trends? Are you seeing increase in volume, decrease in volume? Are you seeing confirmation that you're at the top or at the bottom of a price movement? These many things, and I'm applying these to all the different 3 indexes I'm investing in. And I'm using the volatility, the volatility of the volatility as some of my indicators. But you need to create your own strategy on how to do this and make it systematic and process driven, not emotion driven. So there you have it. It's Monday. It's 10:45 in the morning here on the Central. As you can see, I'm in a hotel room because I'm traveling. Really excited for my wife. She's releasing her stationery line here in the next month, and I'm here to pick up samples here in Montgomery, Alabama. And so, if you're needing gifts or anything, check out gingerleedesigns.com. She's got great things there. Sorry, just a little promotion for her. I'm really proud of her and excited for what she does. Anyhow, hopefully this has been helpful. And always, this is educational. This is not advice. This is my opinion. This is what I've done. It's not perfect, very much not perfect, but it's what I'm seeing. I hope you will develop your process and system to capitalize on these, in my opinion, opportunities in the market. And always, 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 it's Monday. Yeah, today is rough, but always, when things go bad, like my daughter was saying, when she spilled all her gel at college and her hair gel, and she got stained her brand new sweatshirt, and she was up till 4:30 this morning trying to do some stuff, and she was having an emotional liquidation sale this morning. I said, honey, you just gotta laugh because shit happens, and you always, always, at the end of the day, you gotta live loud. Just enjoy it, learn from it. You will recover. You will make great mistakes, but you will capitalize and make great wins. Always manage your emotions and always live loud. Peace.